Hello traders, so welcome to Nelson's Trading Academy. Today I want to take you through the CRT model. The CRT model is one of the best strategy in forex trading currently. It's the best and 100 about 90% of the winning trades comes from the CRT model. So long as you've just understood the concept, then it will be very easy for you to capture and to identify the trades in the market. So my name is Nelson, a forex trader, and yeah, I have experience in trading. I've been trading for more than 5 years currently, and I have very good overview in the market. So first of all, we want to know what is CRT in general. So CRT is the candle range theory. The candle range theory. So for example, we have this introduction at this point. Uh, the theory that every single candle is a range that is power of 3, meaning when a high or low is swept, meaning when a high or low is swept, price is drawn to the opposing wick. At this point, I want you to be very clear. I want you to make your mind be clear, understand the concept. Don't rush. Please, let's move on slowly by slowly. Today, I want you to understand the concept. In this point, we are seeing two different types of setups. We are seeing two different types of setups. So at this point, we are in a bullish state, and this point, we are in a bearish state. So I want you to differentiate between bullish state and bearish state. So at this point, we are at bullish, and at this point, we are in a bearish state. For example, when we are in a bullish state, then we are seeing the market. Maybe we are trading towards the trend of the market, where the trend is showing us it's an uptrend, and thus we are trading maybe retracements, forming the higher lows in the market, because we are looking for opportunities. That only buying opportunities in the market, we are looking for them. So at this point, we are supposed to be looking for the CRT candles that will give us the buying opportunities. Buying opportunities. For you to identify the CRT candle, one, this candle must have a momentum. It should have a momentum to show you that it's perfect and it can be of benefit to you. For example, this one, we are marking the red candlestick. Let me show you that. We are marking this red candlestick, the bearish candlestick. Then we are marking the high and low of the candlestick. We name them high and low of the candlesticks. So this will be our high and this is our low. And this is our low. At this point, we wait for the candlestick number 1 to complete with strong momentum. After candle number 1 completed forming, then we go to candlestick number 2. The candlestick number 2 must sweep liquidity. The candlestick number 2 must take the first candle low before closing above it. So it should close above and should also take the previous candle low. That is what you need to know. This is a must. And let me repeat again. The first candlestick should be our CRT candle. Then the next candlestick should take the first candlestick low. That's showing that liquidity has been taken. So after this liquidity has been taken, that is the threshold. So we wait for the candle number 3 to enter our trade. So this is what we have to do. we use the first two candlesticks. The third candle, we will be looking for a buying or selling opportunity. Same case to bearish candle. We are looking for the candlestick that opposed the direction of the market. That opposed the direction of the market. This matter, let me show you this one. We have the red candlestick, and the red candlestick, remember that this market is in an uptrend stage where we will be seeing the green candlestick or the bullish candles being driving the market. So bullish candlestick should be on or should have a lot of momentum or taking place in the market. So buyers should be the one in charge of the market. Then for the candlestick that will oppose the movement, that is the candlestick we will identify as the CRT candlestick. I'm going to show you clear demonstration on the charts, on the historical charts. So the CRT candlestick or the CRT model is being driven by the power of three. The power of three, this is how the market usually does on daily basis. Adding on this ICT concepts, we have the power of three. The power of three, that is the accumulation, manipulation, and distribution. Accumulation, this is where the price will be ranging or there is no clear direction of the market. We have the manipulation. This is where the price will break the range direction to trap traders because of liquidity. So liquidity, this is where most of the people has placed their stop losses. So that's stop losses being manipulated, the price being manipulated, then stop losses be taken out. That is why we call the manipulation. This is where it shows the wrong movement of the market before now going to the distribution stage. This is where the market will be going toward the correct direction. So the price will go against the manipulation movement. And here we look for long or short positions. That is how now we can use the accumulation, manipulation, and distribution. So let me show you how the accumulation, manipulation, and distribution works. So this is how it is. The accumulation, manipulation, and the distribution. This is how it works in the market. The accumulation stage, this is where there is a ranging market or market you cannot really identify the direction. You cannot really identify the direction of the market. Now, after the accumulation, the manipulation will now happen, showing the wrong direction. So most of the people will think that the market has changed direction, but it's not yet changed. And this is where most of the people will sell or buy or buy in a bullish state, in a bearish state. So at this point, we are supposed to wait for the price to manipulate, and then we now look for an opportunity on the third stage. This is the candle number 2. So on the accumulation stage, we have the candlestick number 1, the candle number 2 being the manipulation, and the candle number 3 being the distribution in the according to the CRT model. I want to show you exactly. So let's check on what we are supposed to be seeing. So guys, if you are enjoying the video, kindly please subscribe to my channel, like, comment, ask any question, and I will respond. Now, let's check. We have the candle range theory. Each candle is a range. Every candle has its own power of 3. So every candle has its own power of 3. This is where a 4-hour time frame and daily time frame candlestick has a lot of candlesticks when we come to the lower time frames. So I want you to imagine that in a daily time frame, we have how many candlesticks? We have how many hourly time frames, a candlestick in daily time frame. So that single daily candlestick has a lot of candlestick when comes to the lower time frame. That's why we say that every single candle has its own power of 3 because there is formation of different directions concerning the different time frames. So at this point, with respect to higher time frame PD arrays, look for 4-hour candle forming at a specific time of the day, that is 1 a.m., 5 a.m., and 9 a.m. Eastern Standard Time. So kindly, you have to consider the standard time, Eastern Standard Time. This is where most of the time is London and New York sessions. This is where most of the CRT candlestick happens. So what you need to know is only to understand how to capture the CRT model. Then after that, you will be able to spot entries even without considering time, because it doesn't mean that it's a must that the candlestick being formed is from 1 a.m., 5 or 9 a.m. Eastern Standard Time. But you have to put that into consideration as you are backtesting the strategy. What you need to do is to wait for the candle to purge the high or low of the first candle and then close inside the first candle range at a specific time, that is at 1, 5, and 9. So at this point, we are considering the 4-hour time frame, remember? So at 1, 5, and 9, this is only for 4-hour time frame. And as well for 1-hour time frame, you can also identify them. So mostly you can get the one in 1-hour time frame, and also you can get one in 4-hour time frame, daily time frame, and also weekly time frame. The rules in the CRT models. This is the rules in CRT model. So do not trade against the trend of the market. Then after that, take your partials at 50% of the CRT range. You take your partial and 50% of the CRT range. CRT high or low to be your final target. So guys, this is not the end of the video. I still have a lot of the content, a lot of information below here. So don't quit or don't move out. Just please listen until you complete the video for better results. So this is how you can get high probability CRT candle. This is how you can get a CRT candle, a very high probability CRT. Before looking for the CRT formation, one should consider or one should confirm the high time frame bias of the market. Time frame bias, high time frame bias is the key, essential to trading. And if you want to get the correct direction of the market, you should consider using higher time frames. For example, weekly time frame, monthly time frame, daily time frame, or even 4-hour time frame. So consider these time frames for better results to know exactly where the market is moving to, and to know clearly how to spot the CRT candle. Then we have the exactly below the CRT low and above the CRT high, there should be an order block, mitigation block, breaker block, or fair value gap, Now, These are the key points. In fact, I should have added the liquidity zones because the liquidity zones are what is driving the market most. But now we have to consider the order blocks, mitigation blocks, and order block and breaker block. So please, if you don't know this kind of key levels, then please revisit my videos and you'll have to learn more. I'll be uploading my videos each and every day, each and every week. And for that matter, I'll be explaining very well on how to identify and spot them. So for the order block, that's normal. Order block, I'll show you that on the historical charts on how it will help us on how to identify the CRT model. Higher time frame, premium and discount area should be considered. Sell at a premium and buy at a discount zone. So at a discount and premium zone, this is where it the range where it ranges. So for example, let me assume we have this kind of ranging market. Yes. Then the market is moving up, down, up, down. So guys, you should consider buying at the discount area. So 50% of the discount zone, 50% of the ranging is this one. We have this one. Yeah, this is the 50% of this ranging market. So what you need to know is that you need to buy at below 50% because this is the discount zone and sell at above 50% because buying at premium zone can take you into losses, can make you lose your money when the market retraces, showing maybe confirming the fair value gap or imbalances in the market or inducement. So you have to be considered. You have to consider that as you are trading. We have alignments in the market, time frame alignments, higher time frame, then we have lower time frame. When you are looking for the CRT candle, then you need to know when to enter the market. At this point, for the weekly CRT candle, we are looking for 4-hour time frame. For daily, we are looking at entries, looking for entries at 1-hour time frame. 4-hour time frame, we are looking at entries for in 15 minutes and 1 hour at 5-minute time frame. This is key, and you must consider this for you to get very good entries. This will help you when you are looking for entries, and thus you risk a small amount of capital, smaller amount of money when placing your stop losses because you cannot get your entry using the higher time frames. So you need to consider that. So guys, please subscribe to my YouTube channel, like, comment, and share. If it's interested, then if it can help you or if the video is helping you, then you can just comment, recommend. So guys, I want us to look at the charts and see exactly how to identify the CRT candlesticks in the markets. For example, let's use the Euro USD. Let's check on the Euro USD. Let's use 4-hour time frame. Um, So guys, this is one of them. This is one of the CRT candle. I want to show you that. We have so many CRT candlesticks. We have so many CRT in the market. Let's start with this one. So this is one of the CRT trade I took, and it was the best. For example, we have this one. I want us to check the direction of the market in the first place. Let's check the market direction. Let's check the direction of the market. So on seeing the direction of the market is in an uptrend, and that is clear. We are seeing that this market is in an uptrend mode. So what we have to do is always to look for the CRT candles which support our trend, the bias of the market. Now we come to the CRT candle itself. So at this point, this is where what you need to understand it most. For example, the market is in an uptrend and the buyers are taking control of the market. The buyers are feeling like they are owning the market and they're keeping pushing and pushing and pushing. Then there is something that happened and forced the buyers to lose the weight or lose momentum in the market. So for us to know that this force, this seller's force will still exist, then it will be proven when the next candlestick is completely or is completed forming. So the candlestick number 2, after this strong candlestick, should close below so that we can know that this trend has changed or the sellers now are taking control. But in this case, we are seeing only one candlestick of which it's from nowhere. We don't know where this candlestick started, or it just came in. The sellers just came into the market. Maybe the price was affected by news events or something like that. So internal news and whatsoever. But now, what we need to know is that the trend of the market is in an uptrend. And at this point, buyers were taking control step by step, trying to push the price up. Then all of a sudden, a very strong candlestick with high momentum started forming. So after this candlestick started forming, after this candlestick completed forming, the next candlestick, that is candle number 2, followed, then swept the liquidity of this one, of the first candle, swept the liquidity of the first candle, then closed above the CRT low. So when the candlestick started or closed above the CRT low, this is a clear indication that buyers are still in control of the market, that the sellers did not have enough weight or enough force to push the buyers down. So now you can courageously get your entry after candle number 2 is completely formed. Now, what we have said is that we need to know our targets, where we are targeting. We need to know exactly points where we are targeting. For example, let's take another example. We have so many CRT candlesticks. So in that process, this one is the key point, and I've just indicated as the key point. It's the best thing you need to have. This acts as a liquidity zone. So this one generally came and took this liquidity area before started buying. So this also supports the CRT candle. And with that, we have a perfect entry, or we have a perfect trade. Now, after that, we are seeing the buy my break of structure at this point, of which break of structure indicates that the trend of the market will still proceed. The trend of the market is in a continuation state. And in an higher time frame, or in when the market is in an uptrend, there is formation of higher highs and higher lows. So after the market has broken the structure, we are waiting for the price to retrace back to the nearest fair value gap or order block, or either we can use Fibonacci retracement to see exactly where the market will probably come to before buying. So we have three options at this point. And if you are still watching the video, you are very lucky because I'm giving out so many things in just one single topic. So let me show you an entry or exactly thing that shows us that this CRT candlestick or CRT model is valid. At this point, we have the fair value gap. We have the fair value gap. This is our fair value gap. Yes. This is our fair value gap, of which the price will be coming back looking for it to balance the market. As well, we have the order block. This is our order block, of which the market will be looking for order block. So the order block with fair value gap has a lot of, has more quality. But now fair value gap is what is considered most because it's balancing the market. So when a CRT candle happens in maybe between the fair value gap, closes above, then it shows us that the trend now, or now it started going to the opposite direction, showing that this is now exactly the exactly thing we are looking at. These are the key points we were talking about. You need to know this. If you don't know how to use the fair value gap, you can text, or you can comment and show. You can comment. I will make more videos explaining all of that. This is another CRT candle after the break of structure has completely formed. Then now the trend, yeah, exactly. This is the one we are talking about. We have so many candlesticks. For example, this one. This is one of them. This is also being supported by this key point. This key point is also the order block. As you can see, this is an order block. So CRT candlestick started forming after the order block. This was just to show us about the entry because Mostly, if you can see this one, it happened after and closes almost the CRT high. So at this point, it will be difficult for you to identify where to enter the market. So it will be best for you maybe to wait for the next CRT candle to be formed, then you get into the market. Let's check if this was a valid CRT candle. Okay, this was not a valid CRT candle, but it's very close to it. So you can also use other analysis or other concepts to relate it. Then you can enter the market. So you can relate if you can see the nearest order block or nearest fair value gap, you can as well use that to trade that position. We have so many opportunities in the markets. I want to show you exactly the one used in gold. So for this matter, the CRT candle can be used in either of the CRT candlesticks can be used in either synthetics or forex markets, synthetics, and all of that. CRT model can be used. So as we are talking, there is a CRT candlestick that's going on already, and this is one of them. So this is gold, and this is the CRT model that's happening right away as I'm recording my video. I'm in for this trade, and this is the best trade I know. And also having the CRT model knowledge, you will be good to go. You don't need so many things so that you can now be a successful trader. You need to backtest your strategy. Use the simple strategy that you have. Use the simple strategy that you have to enter the market. You don't have to look for so many complicated things. Just look for one by one. After understanding one concept, then look for another concept, so that it can help you to expand your knowledge in trading. So that it can help you to expand your knowledge in trading. So guys, subscribe to my YouTube channel. I'll be sharing my Telegram group link in my description, and also all my pages, you will be able to get them. I wish you all the best in the markets. Ask any question in the comment section, and I will make a video explaining very clearly on considering the question that you ask. Have a good time in trading. My name is Nelson, and I'm a forex trader. I'm proud to make you a person you need in life. Goodbye and success in your trading journey.